Thank you very much, Chad. We appreciate the opportunity to share the MemberOne story and how FMSI has helped us gain some efficiency in our retail centers. I want to just start off with a little bit of history about who MemberOne is and where we're located. Currently, we are located in Roanoke, Virginia, which is the southwestern part of Virginia. We're just under $600 million in assets with about 70,000 members. Our credit union was established in 1940 to serve the Norfolk and Western Railroad employees. And we have a strong heritage in this area with the railroad and continue to make them our premier partner company. Next slide, please. A little more information on who we are is we currently serve over 560 small employee groups or partner companies. We believe that building relationships at every level in our organization is important, but certainly with our partner companies is a strong business for us because we see the values in our community by these relationships. Since 2008, we've seen a 40% increase in our membership. That has been stimulated, again, not only through our small employee group, but the traffic that's walking in our retail centers as well as through our indirect market there. Currently, we're serving in 4 markets in Southwest Virginia, the Roanoke Valley, the New River Valley, Lynchburg, and Franklin County. We have 11 retail centers, and we will we'll be opening another center this fall in our Lynchburg market. Certainly looking forward to the opportunity that it provides in that area. At this point, I'm going to turn the presentation over to Leanne Gill, one of our VP regional managers, and she'll talk about how FMSI is directing our day-to-day business.
Good afternoon, everyone. Just to share a little additional information with you, with my colleague Jenny Arrington, we oversee the operations of our retail centers. As Paul alluded to, we have 11 current locations and 1 to open in the fall. FMSI has been a product that we've been using for roughly 3 going on 4 years now. There were some opportunities that we found when we first introduced the system to the organization. About a year ago, Joni and I rolled into our new roles, and this was one of the very first things on our plate, was to really roll FMSI as a full-service product to our retail centers and get folks using it. Some different data that I'll just share with you up front. Over the last 2 years, we have shown over a 6% decrease in labor costs, over a 7% increase in transaction volume for the organization, and over a 28% decrease in opportunity costs throughout the organization because of some of the changes that we've made. I'll share with you some of the changes that we implemented to make all of this happen. One of the very first things that we did was to hold our leaders accountable to using the product and to using it consistently across the board. We redefined roles, we built skill sets, and you'll see that through some of the numbers and some additional information that I'll share. Just to show you on a monthly basis the transaction volume MemberOne has, we hit in the last 2 years, as some data that I'll show you, or 3 years, excuse me. In 2010, we had our highest transaction volume at a little over 115,000. And then our lowest transaction volume also hit us a month for just a little over 85,000. However, if you look at an average piece to MemberOne, we tend to fall in that little over 104,000 per month on a 2-year average. Like I said earlier, I know the industry standard says that transaction volume is on a decline for financial institutions. However, we continue to see that rise. About a year or so, or back last January, we actually removed ourselves from the QSO network And as being a service center, we thought that we would see a decrease in transactions around about 5% due to that pullout. However, we've actually seen an increase in transactions as a result of that pullout. So just gauging some of that, it looks like we were able to stimulate a little more business as MemberOne being the credit union of choice in the area. We'll go to the next slide. Some cost per transaction, just information for you. In January 11, we were at our highest point as an organization setting, around 87 cents. I think the industry standard is about 72 cents per transaction. As you'll see, we're very proud to say as of May, we were holding steady at 72 cents per transaction. Our organizational goal is just a little over that at 73, and here in the last couple of months, we've been consistently hitting that. We've decreased our cost by over 9% in a 2-year span, and that cost by transaction, so we're pretty proud of those numbers. We can continue to see branch leaders or retail center leaders put in more efficiency pieces to work more efficient, lean, mean machine, and we see those numbers continue to decline. So on with our next slide. One of the things that we really look at and we started to focus on roughly a year ago was how we were utilizing our team. And as you can kind of see, in a year's term, we look at this as far as last August, we were at 77%. Currently now it's at 42% piece, and we continue to see numbers grow as a result. Some of the different things that we had done in order to get these numbers where we're wanting to be is making sure that everyone knew their role. And when tellers weren't necessarily needed on the line, that we really focused on using them in different capacities, whether it be as greeters in our lobby for member service, whether it be for educational opportunities, whether it be for cold calling, using new member onboarding as a strong piece to welcoming our members aboard, looking for opportunities to grow that relationship and build that relationship and look at penetrating those new members per household. We really focused on making sure that we had a well-rounded group of individuals that could meet the need no matter what the need was at the time. Another one of our strategies was a healthy hiring process. We really started to dig a little deeper in who we were hiring and what exactly it was that we were looking for. Really searching for the talent to build a relationship with a member, that education-based sales, making sure that our employees had all the resources that they need to meet the needs of the members. Some keys to our success was truly get back to the basics and have our leaders goal-focused and have them accountable to using the system. I had been out of the retail center arena for about 3 years when I came back in last summer, and Joni and I quickly really started to learn the system through a different level and just seeing how it can work for the organization as a whole. So the more we learned, the more we were engaged with the program as regional leaders, which also then stimulated our branch or our retail center leaders to catch up, if you will. So we really just went back to the basics. We went straight back to some of the default settings that FMSI had helped us originate when we adopted the system nearly 4 years ago, because we wanted to just get some standard practices in place, and we wanted to get some standard data to see what we could do to grow our numbers. We learned to trust the system. You know, it has where you can go in and edit for scheduling, but you have to pay attention to that forecasting piece. You have to watch it closely, and if the system says you only need 2, then trust it and go with it. Yeah, you always have to have that backup contingency plan in place, but trust the system and knowing that it's looking at that data and it's going to tell you exactly what you need. So trust that that you can rely on it to give you good numbers. Leverage that scheduling tool. With the scheduling tool, we use this tool in a couple of different forms. More importantly, we may have 5 FTEs assigned to a unit or a retail center. However, if it was only necessary for 1 or 2 to be serving the member, have those individuals scheduled as education time, cold calling time, member greeting time, whatever those other pieces are that helps your center run and meet goals. So we use the editing system to set tasks for those individuals with their scheduling. Defining employee roles, so very important. And this is going back, and we did just this, went back in and determined what it was that our leaders were responsible for, what our teller supervisors were responsible for, and ultimately what our tellers were responsible for. And when everybody knows what they're there to do and how they're there to serve, it makes this a little bit easier on knowing or being able to trust the system a little bit more as well. Again, to mention our hiring practices, we really worked with our leaders to determine what it was that they had to have, what were their non-negotiables, why they were hiring these individuals. Another piece is as we became more efficient, we made sure that we were hiring accordingly. So if we had an FTE position that became available, we looked at it to determine could we break it to 2 PTE positions, and then we only needed to fill 1 of them right now. Another hiring practice that we've engaged in is a float team, that this is a float team of individuals that can go throughout the organization and serve as necessary, which kept our overhead and our efficiency, our overhead down and our efficiency pieces up, which we deemed as highly successful, as well as open positions come available within the organization. Those are trained individuals that can step in rather quickly. Those are just some of our key strategies to being successful. We enjoy seeing the success of our leaders. They've certainly shown us what they're capable of doing. We see successes each and every month. We make very small changes at a time. We don't make a lot of changes at once. This is under the advisement of FMSI, so you can track what changes make the biggest difference. That's about all I have. Those are just, in a nutshell, some of the things that we do here at MemberOne.